Thank God it's Friday. Good morning and welcome to Business Morning on Channels Television. I'm Amy John Mekwa.
And I'm Ladi Williams. Thank you for joining us wherever you're watching from. Let's take a look at what's in the news. Oil prices barely moved today, even as more supply came back online in the U.S. Gulf of Mexico following two hurricanes, with the benchmark contracts on track to post weekly gains of around 4% as the output recovery seen lagging demand. U.S. West Texas Intermediate crude futures slipped 2 cents to $72.59 a barrel after settling on change on Thursday. Brent crude futures inched up 4 cents to $75.71 a barrel, adding a 21-cent gain on Thursday. Both contracts were on course to climb about 4% for the week, with Brent near a 7-week high and WTI near a 6-week high. Its output in the U.S. Gulf of Mexico has recovered more slowly than expected after Hurricane Ida damaged facilities in August and Tropical Storm Nicholas hit this week.
And outside Nigeria, South Africa's coastal city of Durban will be the host city for the second edition of the Intra-African Trade Fair. At the ceremony, there was former President Olusegun Obasanjo as the president of the ceremony, and also the president of Afrexim Bank, Professor Benedict Orama, and representatives of the African Union. The event, which was previously hosted by Egypt, will be held in South Africa in November.
We indeed welcome the opportunity, not only because we will be hosting the event, but its magnitude talks to exhibitors coming to exhibit, but exhibitors must firstly produce. And therefore, it talks to production in Africa.
We urge the business community to take advantage of IATF 2021 and use it to explore business opportunities. Africa needs the IATF more than ever to jumpstart our economies and help us to build forward better and recover from the COVID-19 pandemic.
The Organization for Economic Cooperation and Development, the OECD, defines natural capital as assets of the natural environment. For the World Bank Group, the depletion of natural capital, including assets like forests, water, fish, stocks, minerals, biodiversity, and land, poses a significant challenge to achieving poverty reduction and sustainable development objectives. With the world seeking ways to cushion the impact of COVID-19, one conversation ongoing is how to accelerate the integration of natural capital in the financing of development. For bringing this conversation to home, we have the Chief Economist at PwC Nigeria, Mr. Andrew Nevin, joining us from our Abuja studio. Good to speak to you, Mr. Nevin. Good morning.
Great to be with you, Edie. It's always a pleasure.
Yeah, so how important is this natural capital when it comes to economic development?
Well, let's start with a very basic fact. I mean, we're all natural beings living in a natural world. If there wasn't nature, we wouldn't be here. So, of course, it's life itself. So that's the starting point. But then when you go beyond that, I think economics has a big problem over the last 30 or 40 years. We've been very focused on GDP, but we haven't been focused on keeping your capital intact. And the way World Bank and others, OECD, are defining it, there are 3 types of capital. One type of capital is your human capital or your brain capital, what your people are capable of. Another type of capital are things we're familiar with, so factories, houses, apartments, infrastructure. But what's coming is there's a third type of capital, which is natural capital. So what does nature give you on that? And we need to take account of all 3 of it. So, but from my perspective, I think natural capital is the most important. It's the starting point for everything else that we have. So it's great to see that the OECD, and I know the World Bank as well, and the IMF and other groups, and of course I hope here in Nigeria, are putting it on the agenda.
All right, so the African Development Bank launched a new program called the Natural Capital for African Development Finance Program that aims to accelerate integration of natural capital in the financing of Africa's development. This also aims to be consideration of natural capital in infrastructure financing projects in Africa. And I'm wondering, how can Nigeria, tap into this?
Well, I think the first step is, of course, to make natural capital one of the core concepts that we use. And just to sort of give an example to illustrate for all the viewers today, I mean, the reason why this concept is so important is you can imagine, let's say we produce a GDP headline number, let's say if we grow, for example, which is higher than we have been, 6%. But if we're doing it at the expense of we're degrading the land, or we're cutting down more trees than we can sustain, or fishing more than we can fish, or we're destroying the mangroves, the protest habitats, that 6% GDP growth is in fact false, because what we've done is we're not really growing in a sustainable way. We're eating into our natural capital. So the starting point for it is, how do you actually measure the natural capital? And that's why there's so many efforts around the accounting and, you know, what services do we get? So obviously there are natural capital that's related to renewable natural capital is the term that's used. So things like we grow things on the land, we harvest trees, we have reproductive animals, and they, you know, natural capital as well. And we can't over-harvest those resources. There's other things like the mangroves I mentioned that we need to measure, because they give us services in terms of helping our entire society work, protecting from erosion, for example, protecting from flooding. We need to measure the value of that. So the starting point is being able to measure it, and whether our natural capital is being degraded or not by our economic activities. And once we can measure it, then it becomes a lot more easy to finance it, to decide how to use it in the financial system, how to account for it. But right now what's happened, as I said, I think the economics profession's done a bad job for 40 or 50 years not integrating natural capital, and they've given us the false illusion that we can have growth when really the growth is not sustainable.
Oh, in a country like Nigeria, I mean, you talked about depleting it, which of course I think the World Bank has also talked about. But in a country like Nigeria, where we're still talking about how to add value to the natural resources that we have. You talked about fishing, you talked about cutting of trees. These are like basics, basic activities which are carried on, especially in the rural part of Nigeria. Now, how do we infuse this to say, oh, you have to do it to a certain limit so you're not depleting the natural capital, or you have to do it this way? How do you think we can start this talk, especially when you're looking at the rural setting?
Well, I think what we've said for a number of years at PwC is, and many others, of course, we need to grow the agricultural sector, and we need to have more value added in agriculture, which means agro-processing. Simple example, we have, I think, about 50% of our tomatoes are lost post-harvest. You know, we need the storage, but also the processing of tomatoes to turn them into tomato paste, that they're valuable to us and they're not lost for harvest. But I think, you know, the way the world works at the end of the day is things happen where money flow to it, where capital flows to it. So when we can start to measure whether it's a sustainable practice from the viewpoint of the natural capital, that's where investment will go. So I mean, to do that agro-processing, expand the agricultural sector, the storage, as I said, requires investment. So that the people that are investing these funds are making sure it's done in a sustainable way, so natural capital's not depleted. Then I think we'll get there. And of course, we mentioned the AFDB program. That's what they're setting up. It's not just the measurement of natural capital, but then it's investing against the measurement of natural capital. So you're not going to invest in projects where people are depleting the natural capital to get a high GDP growth or a high income in 1 year. You're going to invest in projects where the natural capital is maintained or even enhanced on that. So it's a big step forward. And of course, it fits in with other trends we're seeing in the world. We have a more general sense that GDP is not the right lens. We need a broader lens with the Sustainable Development Goals, and natural capital fits with that as well. So I think the ESG investing and natural capital investing will work together over the next 5 or 10 years. And I have to say, I mean, you know, you say, oh, we're less developed, how will it work here? I think compared to many other countries I look at around the world, I think these concepts really have a lot of traction in Nigeria. And I think the government and then the private sector actors will embrace them just the way we've embraced SDGs. So I think it's a fantastic step forward. And of course, you know, the other part of all this is, you know, we need to do this all in the context of climate change. So, I mean, as our natural environment becomes more volatile, more flooding, more droughts on that, we need to take even better care of our natural capital than we ever have.
Right, and the natural capital includes land or, you know, carbon storage, which accounts for about 30 to 50% of the total wealth of African countries. Although it's often not included in economic measures, will it make a difference if, you know, natural capital is actually included in the GDP?
Well, I think it'll make a difference, but you raise a very important point. So there are countries in the world that provide natural capital to the rest of the world. So for this example, in carbon storage, because of course if you release the carbon, we would have a climate catastrophe on our hands. So they're providing services to the rest of the world. The problem with the natural capital in a case like this is it's very hard to get the financial flow to reflect that. So a country, you take DRC, for example, with the incredible rainforest there, the immense rainforests, similar to the Amazon, absorbing so much carbon, but no one is sending a check to DRC to compensate them for what they're doing for the world. And I think that's a real problem that we have. I don't know whether all the financial institutions and the government organizations can work this out, but countries that are supplying these natural capital resources to the rest of the world need to be paid for it. Otherwise, they're not going to protect them. They won't be the carbon sinks that we need. They won't protect their forests and other elements like that. So I think it's a very good question, but it's really essential to have natural capital accounting and economics and the way we move forward. The people that are providing natural capital to others get compensated.
All right, so there's also the term natural capital cost, which is used to describe the non-market value of the environmental resources that businesses depend on to grow revenue. How conscious are business operators of this?
Well, it's related to what I just said. I mean, we have these non-market contributions to natural capital, so people don't even know that they're taking advantage of natural capital, and they don't take care of it. I mean, to give it a simple example, or maybe a tragic example, we've seen in Europe and in North America really a destruction of the bee population over the last few decades, and of course Europe took some action on it, banning neonicotinoids on it. The United States really needs to take some action. People were not really aware of the fact that if you say you were an almond grower, that you were getting this natural capital service from the bees, so you didn't take care of it, and now it's a problem. So I think that part of what we need to do is just highlight for all businesses, here's the benefit you're getting from natural capital. In some cases, you can create a market mechanism where people have to pay for the natural capital services, and then they kind of build it into their economics, which makes sense, so that they maintain the natural capital. In other cases, it's not easy to build that market mechanism. I mean, an easy one, again, a tragic one that we're all aware of is there's too much fishing in the world, overfishing. So that is taking the natural capital out of the fishing stock faster than it can be replenished. So what's the net result over time? You have a reduction in the fish stock, and you have major changes in the ecosystem as the total volume of fish declines around the world. And it's very hard to police that, very hard to cost that. I mean, we're all aware countries have a 12-mile limit that's their territorial waters, but then outside of that, other countries come in and fish. So I think there needs to be a lot more kind of stringent thinking about how to make sure that when people extract the natural capital, there's some mechanism where they actually have to pay for what they're taking, because at a very simple level, if people take things for free, so they abuse the water, they abuse the land, they abuse the air, they take more fish than are sustainable because they're not paying for it. They take more wood that's sustainable because they're not paying for it. Ultimately, you're going to have ecological collapse. So it's really critical that we bring not only the natural capital accounting standards in and measurement of it, but also create more mechanisms so the people that take something from the system have to pay for what they take.
All right, beyond businesses now, like on a larger scale, do we see the federal government's consciousness in optimizing natural capital?
In Nigeria, I mean, I think you do see this, and I might have heard it wrong, but I did hear, as part of the next medium-term economic plan for the government, federal government, which is coming on soon, there's going to be a bioeconomic component to it. So as I said, I mean, I don't think Nigeria is behind in thinking about this. I think people, compared to some other countries, people are very close to nature. I mean, even people who live in cities have ties with their villages. They're very well aware of the role of natural capital and nature in feeding the population, which is not always true in some more developed countries, what we think of as more developed countries. So I mean, I'm not worried. Among all the things I'm worried about, I'm not worried that Nigeria will be late in thinking of the natural capital component to it of this. And of course, when we talk about natural capital, we've spent this whole program talking about the renewable natural capital, which is really what we should focus on. So what's happening to forests, what's happening with the soil and land, what's happening with the fisheries. Of course, there's the other type of natural capital which is depleted, which is non-renewable, particularly oil and gas. And I think one of the things that really everyone in this country now understands is, there's not a future for us in oil and gas, and obviously the PIA is important for optimizing what happens over the next 10 or 20 years. But ultimately, the purpose from an economic viewpoint and from a social viewpoint of a non-renewable resource is that resource will eventually run out or will stop using it. So you have to optimize the use of it and reinvest in things that are sustainable. And I think all of these concepts, as I said, I think Nigeria is actually quite advanced. I think the federal government is thinking about it. I think as the accounting standards for natural capital are developed around the world, I think Nigeria will be one of the early adopters. Of course, the CBN was very early on in adopting sustainable banking principles under His Royal Highness Muhammadu Sanusi II when he was central bank governor in 2013, which is almost a decade ago. So I don't see Nigeria being behind in this issue.
So one of the issues when you talk about development in Nigeria, one of the areas of need would be infrastructural development. And now we are discussing how to integrate natural capital into financing development. For you, from your perspective, how do we connect the issue of developing infrastructure and, integrating natural capital into financing of development?
Okay, so let me give you, maybe a couple of examples of that. I mean, I think one thing that we've talked about for a while is, we've been very clear that the #1 sector for economic growth, if you think of GDP headline growth, is real estate, and particularly residential real estate. I mean, we have a housing deficit. We need to have more houses built, and that requires a number of things to happen in the system. I mean, there's a Land Use Act, mortgage system, but on the physical side, it also requires, of course, that we have building standards and we have local materials to build it. So, but on housing, the way it ties into the natural capital is that when we build the housing infrastructure, build out residential housing, we build it in a way that is consistent with the climate that we have, that uses the materials that are from our climate, that is consistent with all kind of the water use in the country and the fact that we have prone to flooding. We can't build buildings or residential real estate in the same way that they would be built, say, in Canada, where I'm from, where it's really designed for a cold climate and keeping heat in the building on that. So, that's an example where you're going to have an integration of our economic development and natural capital. I mean, a second obvious example of that is the energy sector, and of course, we're all aware of the strains on it. We've said for some time, I mean, the future for Nigeria has to be renewable energy, particularly solar energy. And the thing that's so critical with solar energy, of course, is that you can make it in situ, so you can make it where it's required by that. So we have a model, I think a mental model, and of course, I grew up with this model. I grew up near Niagara Falls in Canada. A mental model of building extremely large power plants and then sending electricity very long distances away. But that, I don't think, is going to be consistent with, as we build in natural capital thinking. What is consistent is much more production of electricity in the local areas, which means solar. It also means things like biomass production. So, of course, of electricity, we have a number of examples here of major corporations using biomass and done in a sustainable way. So all of those elements will come in. But those two examples of how to use natural capital thinking in two of our major sectors, one being residential real estate and one being the energy sector.
All right, thank you so much, Mr. Nevin. Great examples you gave there, and we do hope to see it being put into consideration. So we are not just building houses, but building houses that are consistent with our climate and our weather. Thank you so much, Chief Economist at PwC Nigeria, Mr. Nevin Andrew, for joining us this morning, and enjoy the rest of your day.
Thank you, Edie.
So we'll take a break now. After the break, the Monetary Policy Committee concludes its meeting today. What are the expectations? We'd also like to use this opportunity to join us for a special edition of Business Incorporated at 1:30, where we'll be hooking up live with the MPC meeting to hear the decision. And before then, we'll have analysts telling us their thoughts and perspective on the MPC. But before all of that, here on Business Morning, we're looking ahead of the MPC meeting. That'll be after the break. Just stay with us. It's Business Morning on Channels Television.
Welcome back. Now to our next conversation. The Central Bank's Monetary Policy Committee started its two-day rate decision meeting, the fifth for this year. Some of the factors that members will consider include the inflation report for August, which showed a fifth consecutive month of disinflation year-on-year across all the key inflation indexes. Top on the agenda would be the country's inflation issues within the forex market, intervention programs, as well as other burning economic issues. Analysts expect the MPC would retain monetary policy rates as well as other key parameters unchanged at the end of the meeting today. Well, we have Akintoye Oyelaku now, an investment analyst with Cordros Asset Management, to tell us more. Great to have you on the program. Good morning.
Good morning. Thanks for having me.
Yeah, so the committee will discuss issues revolving around the global and domestic economy and decide on the next course of action to help, sustain recovery of the economy and the achievement of its objectives. What is your expectation concerning this?
All right, thank you. So basically, I expect the talks to be around the development around the global rate of vaccination, which you have seen has gained positive momentum since the beginning of the year. And also, I think the talk will also focus on the recent decision by OPEC plus cartel to raise supply by 400,000 barrels per day. Of course, these two scenarios are likely going to be beneficial for for the Nigerian economy. Also, domestically, I think the talk to be around the GDP performance for the second quarter, where we saw Nigeria recording 5.01% growth, and also inflation numbers that came out recently, which showed a sustained deceleration in the rate of inflation, even though inflation still remains very high. We saw inflation moderated to 7.01% in August. Also, another major issue that will be discussed today will be the recent volatility that we have seen in the FX market, more specifically the parallel market. So I think on the balance of scale, it is very unlikely that we're going to see a hawkish stance by the MPC, given the fact that a hawkish stance is going to halt the positive momentum we have seen in terms of economic recovery since the beginning of the year. Nigeria recorded the third consecutive growth in the second quarter. So I don't think the MPC would like to halt that trajectory. And also, given the fact that a hawkish tone would mean a high cost of borrowing for businesses and also for government, this will not likely be the decision for the MPC, given the fact that Nigeria is currently having an issue with revenue. We have a revenue shortfall. We are going to be able to optimize revenue from oil and from other sources. So I do not expect to see any hawkish tone by the MPC. On the other hand, the easy stance will also not be likely, in the sense that loosening the economy will mean that there's going to be more pressures on inflation numbers, and it will also increase the potential for more speculation on the already volatile naira. So this is not likely going to be the case. So looking at everything on the balance of scale, it seems like we are going to see the central bank maintaining the status quo, similar to what we saw in the previous month, in the previous meeting of the committee.
All right. Also, from the previous meeting, the BDCs did not have it easy. That was where we learned that the CBN would halt supply of forex to the BDCs, and they've been in the news since then. We've had a lot of statements from the BDC, from the central bank, about the management of FX. What do you expect from that perspective? Any more hammers on the BDCs, or do you expect any other changes to the management of FX? Because it seems to be a very hot topic, like you mentioned. The value of naira compared to the dollar now is something else.
Yeah, so basically, like I mentioned, that's going to be one of the major issues that will be discussed today. And looking at the previous decision of the MPC to halt the supply of FX to BDCs, and we saw an announcement of commercial banks as the new channels for disbursing the FX, but this has not been very much successful. We have seen a problem of arbitraging by some customers who access FX from commercial banks and then go to the parallel market and then make a good spread on the FX. And also this has led to a halt in the supply of FX for the commercial banks. We have not seen that even the customers that need it for legitimate reasons I've not been able to access it. As a result of that, it's created more demand for the parallel market, and as such, you saw a spike in the naira to dollar levels at the parallel market. So what we could see today is a potential for the reversal in the previous decision that the MPC made before in terms of halting FX supply to BDCs. We may see, the restatement of BDCs as a channel for FX disbursement, although we might see some adjustment in terms of the modalities to halt the rent-seeking behaviors, which led to the central bank halting FX supply to BDCs initially. If this is not done, the pressure on the naira will likely remain at the parallel market, and we may see naira trading at elevated rate compared to the dollar, even towards the end of the year, if we don't see any attempt by the central bank to halt these recent challenges that we have seen in the FX space.
All right, giving your position on the MPC stance, how do you think this would shape the performance of key metrics within the economy, for the remaining part of the year?
Yeah, so basically, if our expectation comes true, if we see a status quo decision by the MPC, it will also mean that the pattern we have observed since the beginning of the year will continue. We'll continue to see the weak base effect continue to drive the recovery in GDP performance. You recall that in the third quarter of 2020, we had a 3.6% contraction in GDP. This has created a lot of room for Nigeria to record between 3 and 4% growth in the third quarter of 2021. So basically, if status quo is maintained, we'll see things going the same way that we have seen them. And if we should see resilience in a rebound in the oil sector, we should see a very strong growth. And also, if non-oil sector remains resilient as it has been since the pandemic, we are going to also see Nigeria's economy printing at a strong rate for Q3 GDP performance. Also, another major indices to look at is the inflation numbers. If the status quo is maintained, it means that business will go on as usual, and we're likely going to see the high base effect in inflation numbers continue to play a major role in pulling down inflation figure on the year-on-year basis, even though it's still going to remain likely elevated when you consider the fact that there's still a lot of insecurity which is affecting food production, which is also impacting the inflation numbers significantly. So this will likely mean that we're going to still see a sustained moderation in inflation numbers towards the end of the year.
So paint the picture for us. If the status quo is not maintained, what can we see or what can we expect?
All right, so if we see a tightening of the economy, it simply means that inflation is going to be controlled more, but it means that borrowing costs will be higher. Business performance may be impacted as business will need to borrow at higher cost, and it will alter the rate at which they could raise capital for their businesses, and putting that in addition to the current challenges that we have in the domestic economy, and that could actually halt economic activities in terms of productivity and consumption. Also, this would simply mean that we'll continue to see more pressures in terms of inflationary pressures. And, this is not something that this central bank will actually want to take place. On the other hand, if we loosen the economy further by making cost of borrowing cheaper, or metrics become lower so that it will accommodate more business activities, and this will only imply that there's going to be more activities, more demand, which will create more inflationary pressures. And already inflation numbers are significantly high, and it is far beyond what the central bank benchmarks its expectation against, which is 9%, achieving inflation rate of 9%. So if there is a loosening of the economy, we're going to see inflation numbers strengthening, which is very bad for the economy. Although it will be positive in terms of GDP performance, we may see the GDP performance strengthening as we see more borrowings for business activities.
All right, so since the last meeting, the headwind in the parallel market has resurfaced, following calm after the committee announced the commercial banks as a new channel for disbursement of FX. Since then, the naira still, remained weak. What do you think is causing this?
All right, so basically, if we see a tightening of the economy, simply means that inflation is going to be controlled more, but it means that borrowing costs will be higher. Business performance may be impacted as business will need to borrow at higher cost, and business activities will continue to see more pressures in terms of inflationary pressures. And if we loosen the economy further by making cost of borrowing cheaper, or metrics become lower so that it will accommodate more business activities, and this will only imply that there's going to be a Yeah, so basically, you recall that the CBN had a ban list of items which are not classified as legitimate items for FX access. This automatically means that those sectors will have to go to the parallel market to source for FX. And then you recall the recent banning of BDCs in terms of stopping the supply of FX to BDCs. This actually crippled their source of supply, even though the central bank is not only their major source of supply, they also get FX from other sources. So what we saw was that when the CBN announced commercial banks as the new channels for FX disbursement, we saw a level of calm in the FX market. However, due to the fact that there was, the FX distribution was not very successful through the commercial banks, we saw a lot of demand going back again in addition to the existing demand. They were going to the parallel market to source for this FX. That's created a lot of demand, and it's just a basic principle for demand and supply. When you have a lot of demand for a commodity or a currency, it simply means that it's going to be exchanged at a higher price, and that means that suppliers could get more premium. And that's what we have seen so far in the parallel market space. We have seen they are closing at close to 570 naira to the dollar levels. And so it's basically a function of demand, too much demand for the parallel market. That's what has been driving that volatility that we have seen in the parallel market so far.
All right. Earlier you talked about, you mentioned the issue with oil prices. Of course, Nigeria's revenue and economy is highly dependent on the cost of crude oil in the global space. Now, this week, for instance, we saw a lot of movement in the oil space because of the Delta variant, because of the hurricanes that we saw in the Gulf region and all that. How should this affect the decision of the MPC, and how can it affect the outcome and the possible impacts on the economy, the movement of global oil prices?
Okay, so basically, as we all know that crude oil accounts for close to 90% of Nigeria's exports. So whatever volatility we are seeing in oil price will definitely play a major role in the decision of the MPC. Also, when you consider the fact that FX crisis, oil market crisis, one of the reasons why we saw foreign investors exiting Nigeria's market. After the pandemic struck Nigeria, we saw a lot of foreign investors exiting, given the fact that Nigeria is largely dependent on the oil market, and given the expected volatility, we saw foreign investors exiting the market. And there's been a lot of talks around the naira being overvalued and the likes, and also you recall the strategy of the CBN in terms of keeping the naira stable following the exodus of foreign investors. We saw that there was a lot of tight supply of FX, and it has in a way affected the sentiment for foreign investors, and that's one of the reasons why we have not seen a lot of foreign investors coming back into the market. So this is likely going to take a little bit of time, and some of the challenges we are observing in the FX market right now is because of the fact that the oil market has not been very favorable, although it has been favorable in terms of our ability to leverage on the currently stable oil price and high price. We have not been able to leverage on that given the technical glitches that the Nigerian oil sector has experienced so far. So, the oil market plays a significant role, and if there's another shock to the oil market, to definitely take a toll on the Nigerian economy, and this is what the central bank will be willing to avoid. And given the fact that foreign investors have not started coming into, if you compare it to pre-COVID-19 levels, it means that the central bank will be trying as much as possible to manage FX supply. And that's one of the reasons why we have been seeing a lot of restrictions. So I think it's going to be a major factor for the central bank. The central bank will be looking at FX management very closely until we see improvement in terms of productivity in Nigeria's crude oil, and also the foreign investors coming back to the domestic market. So it will definitely shape the decision of the MPC around FX.
All right, so considering the decline in inflation numbers and the expected decision of the MPC, what's your expectation on how the market will react?
Well, so recently we saw inflation numbers coming out, and investors were anticipating what the auction result was going to look like. That's the Treasury-based market auction. And, a lot of investors anticipated an increase in the stop rate. However, against what the expectation was, we saw the CBN maintaining stop rate at the previous level. Another major factor that investors will be looking at now will be the MPC, what the MPC decision is going to be. So after the close of the MPC, we also see that affecting or shaping investor sentiment. So if the status quo is maintained, it simply means that with the auction result that we saw, the numbers in terms of the yields on fixed income assets will not likely move upward from what we have seen so far. And as a result of that, we might see a lot of investors taking position to lock yields at their current levels in anticipation that there's not going to be a subsequent increase in yield. And not to forget the fact that we still have Eurobond issuance coming in, which will reduce reliance on domestic borrowing. So investors will try as much as possible to lock in on yields at the moment to take advantage of what we currently have, now for them to be able to optimize their potential return. For the equities market, however, we may not see a lot of bullish sentiment given the fact that we are seeing any season is waning. The impact of any season is waning. Corporate action is the major driver of the performance at the moment. However, this is not to say that there are no opportunities in the equities market also. There's still a lot of stocks to take advantage of at the moment. Stocks that have delivered strong numbers and are currently underpriced at the moment. So there's still a lot of opportunities for investors, both at the equities and the fixed income market at the moment.
All right, sir. Thank you so much for sharing your thoughts with us ahead of the MPC, which is going to end later on today. And of course, we're going to bring that live. Akintoye Oyelakun is investment analyst with Codros Asset Management, and he shared his thoughts with us on the MPC, the 5th meeting for the year. Thank you so much. Enjoy the rest of your day.
Thank you very much. My pleasure.
So talking about the markets, we have Anite here to tell us details of how the market went yesterday. Hello, Anite.
Yes, good morning, Yini. The markets, so we're starting first with the fixed income markets where we had some kind of a bullish sentiments at the bonds market. But first, we'll take a look at the Treasury bills market. This is how it turned out yesterday. Not too much of activities, 4 deals there. All of them just recorded one deal each across the 25th of August, 9th of December, as well as the 13th of January 2022. So not much of activity there. But like I mentioned, for the bonds market, it was bullish. 21 deals carried out there. Of course, across the benchmark curve, the average yield contracted at the short, mid, and the long segments due to demands for the April 20th, 2023, February 2028, as well as the March 2050 bonds, respectively. So that was what happened at the bonds and the Treasury bills market. But when you take a look at the open market operations, not too much. The average yield there expanded by about 27 basis points to 6.4%. But this is what you have as total value there, 50.7 billion in 15 deals across these four instruments were the ones that were traded as of yesterday. Now, let's move over to the central bank's special bills. 29th of November paper for this year. 3 deals carried out. That is the one that is still, on focus. Of course, at the fixed income markets, we're expecting today, for the first time, investors, the Nigerian authorities will be holding a virtual meeting with potential investors for a proposed $3 billion Eurobond. That's according to the Debt Management Office. So now it's the first time that investors will be included in the roadshow, and for this reason, a Nigerian book runner, that's Chapel Hill Denham, would be has been appointed as the transaction advisor for that Eurobond. So we'll of course, today they'll be having that meeting, as well as the 20th of September, sometime next week. So we'll be seeing how that meeting turns out for the fixed income market. Now let's flip over to the equities market. Yesterday, all the gains that we had this week, all of them eroded. On Tuesday, we had a 0.01% rebound, if you call it a rebound. And then on Wednesday, we had a 0.12%. But all of that, take a look, this is the number there, 0.15%. Of course, investors' profit taking, the market the amount of what you call the market breadth, not too good. We had more profit takers than the gains recorded. So this is what it printed yesterday. And of course, the all-share index is still far away from, no, slightly away from the 39,000 points. Over to the sectoral performance, not too good. Red is much dominant there. Insurance sector was the only gainer there. Of course, year to date, we're at about 3.4%. Month to date, we're at negative 0.8%, so not too good for the equities market. Of course, what's good for some people may be bad for the other, vice versa. So we will be looking out for how the market closes the week today, whether maybe if the bear is still going to retain its hold. It has had the better part of this month. Of course, we never can tell. The market can decide to have a mind of its own, but we'll be on the lookout for how Friday's trading session closes at the exchange. Of course, this is what it printed on the activity chart. All across board, red is the dominant. Now let's move over to the smaller unlisted securities market. Of course, that also trades some stocks, securities. It was positive, making a rebound, a 0.04% rebound there. All of it at 639.55 billion. That's the market cap. We had that's a 0.04% also increase on the market capitalization. Then in terms of the volume of securities traded there, 24.66% is what it printed. Value was down by 11.70%. There you see it there, 34.55 million naira. And then the number of deals is 20.93%. We have the number of gainers there. We had just one gainer, that's the NUSD. That's the same market where it's trading on its own market. And then, of course, the decliner there was the NGX group. So that's all we have for the markets. We will be looking out for how they all close today, the week, and then also what to expect from next week.
Yeah, thank you so much, Anita, for the details from the market, how the market fared yesterday. We'll certainly be looking out for how it closes today. We'll take a break now. When we come back, we'll head straight to London, where Juliana is standing by to give us details of what's going on in the UK. Stay with us. You're welcome back to Business Morning. We head now to our London studios with Juliana. Hello, Juliana. Good morning.
Good morning, Annie.
Yeah, so UK retail sales fell unexpectedly in August. What does this tell us about the behavior of retailers or what's going on now in the UK?
Well, I think this data release this morning serves as a reminder that the British economic recovery is still rough. You know, this is the fourth consecutive month that retail sales have dropped here in the UK. I believe the fall in July was about 2.7%. So August's drop isn't as much as we've seen previously, but it still shows that people are holding back. The biggest fall fell in supermarkets, and lots of economists are saying this is because of a change in consumer habits. So before, of course, people were dining at home, but now people are dining out, and this thought has been doubled down by OpenTable and other online booking systems that do show that reservations in the month of August, where the weather was much nicer, is up. So that remains a cause for concern. There are some bright lights. We discussed this yesterday with John Lewis, the retail juggernaut, showing that profits are finally coming back to life. M&S as well, for the first time in a long time, they've upgraded their growth forecast for the rest of this year. So I think now the main thing for retailers is looking ahead of that all-important festive period, which they missed out on last year. So they're going to have to get all their ducks in a row, because of course we know there are so many global supply chain shortages, and a lot of retailers from last month have complained that they are struggling to get some stock on the shelves.
Exactly. So we do hope that the supply chain disruptions will not spoil the festive season for them. But the government is expected to announce changes to the rules on international travel. Have you heard of anything this announcement is going to look like?
Yeah, lots of speculation. It's all speculation, really, until we have confirmation from Grant Shapps, the Transport Minister. But I think, really, a lot of people are talking about the controversial traffic travel light system, red, green and amber. That's to be scrapped. And apparently now it's just going to be two lists, so either no-go or go. So a lot of the holiday hotspots for British travellers, we're talking about the US, the UAE and Europe, they will be moved from amber to green, or shall I say from amber to this go list. And then lots of countries that are currently sitting on the red list, I believe there are about 62 nations, that's going to be halved. A lot of people waiting to hear on places, I believe we discussed this yesterday, Kenya, the likes of Turkey, they perhaps will be moved into the go list. But we'll have to wait and see. I think one of the biggest changes are going to be PCR tests, which are a lot more expensive. Apparently they give you a lot more of a forensic detail about whether you've got COVID. But yes, lots of families that were hoping to go away just couldn't, because they couldn't afford to pay for the holiday, as well as £120 for a test for a family of four. So this is going to be scrapped for a lateral flow test. Now, a lateral flow test you can take in the airport because you get the results within minutes, and it is much, much cheaper. But yes, we'll have to wait and see. And as always, of course, I'll be updating the team, Innie.
Sure, I trust you, Juliana. And talking of the UAE, there's been the UK Office for Investments has signed an agreement to significantly expand the UAE-UK sovereign investment partnership. Do we have the framework for this investment framework?
Yeah, this is a big, big win for Prime Minister Boris Johnson, who yesterday met in Downing Street with Sheikh Mohammed bin Zayed Al Nahyan, and a lot of this sovereign investment fund detail was discussed at that table. Now, I believe £1 billion is going to be coming into the UK from the UAE by the end of this year. The UAE is a massive trading partner for Britain. Trade currently stands at about £18.6 billion. And of course, since Brexit and Britain's departure from the European Union, they have been looking beyond that continent to make sure that they can soak up as much, foreign cash as they can. So an expansion of the Sovereign Investment Fund is good news. It is going to focus on three key areas, technology, infrastructure and energy, and they are going to be expanding their bilateral relationship with regards to regional stability, climate change and education.
All right, thank you so much, Juliana, and enjoy the rest of your day.
Thank you, Innie.
So let's take a peep into the crypto market with Laddie Williams.
Hey, Innie, well, it seems our red Fridays are back.
Wow.
See, it's full red in the market today.
Wow.
Just Doge and AVAX there in the green. So maybe that trend is back. Who knows? Well, market cap, $2.16 trillion. It's up by 1.66%. 24-hour volume traded in the total crypto market this morning, $108.85 billion. Bitcoin dominance still sits there at 41.64%. And price of Bitcoin this morning, 47,944. Still finding it hard to break that 50K resistance. It's down 0.93%. 24-hour volume traded in Bitcoin, $30.68 billion. We have a price of Ethereum this morning, $3,549, down 2.25%. I got some news about Ethereum. Traders moving about $1.2 billion worth of Ethereum out of exchanges. So it looks like they're looking to hodl at this time. Well, let's bring in Michael Inaji now, digital market analyst. Hello, Michael.
Hello, Laddie. Good morning. Happy Friday.
Great to have you, Michael. Happy Friday. Well, let's look at what's happening in the NFT space. I see OpenSea, the biggest NFT marketplace, been accused of insider trading. What's happening there?
Yeah, so basically what's going on there is OpenSea, the biggest platform for NFT trading. It's a centralized exchange. We saw NFT volumes go from just $13 million to just shy of $5 billion this quarter. So you see NFTs representing 10% of global sales. So OpenSea actually became a fairly big platform in all of this. So what happened actually was on their main page, when you log into OpenSea, they have a featured page. So every once in a while, like every couple of weeks, they put up a featured artist. But what happened was their head of the development, Nate Chaston, what he would do was before those products dropped on their homepage, he would basically buy it. And so he would buy the items before they listed it. And because of the power OpenSea has as the main volume, the main exchange for volume for that $5 billion of NFT trading we've had this year, he was able to profit from that because he basically knew what was going to be featured, and he would just buy like days before, and he would just, when the hype was set in place, he would just take advantage of it. But that's insider trading, like, because the company has the attention, and then he just, he front runs the attention. So by all means, that is 100% insider trading.
Okay, well, we've seen NFT trades make up to 10% of global art sales this year alone. What does that tell us?
It tells you a lot of things. It tells you that those in crypto have made a lot of money this year. Because it's something to the reason why you see NFTs making 10% of global sales is something called the wealth effect. It basically states the richer you become, the more likely that you are to buy other things because you now have more funds, and that's what you're basically seeing in the NFT market. You're just seeing market participants want to diversify their holdings, and it's not so like when you have individuals that have 100% or 80% of their net worth in digital goods. It's not a far off, next line to be like, hey, I'm going to put 10% or 20% of my assets into digital goods because 80% of it already is in digital assets. So you're going to see this generation that is already on the blockchain move into what's called the metaverse because everything will eventually be digital. This is the first time we've been able to monetize digital goods and give them ownership in such a way that I have a one-of-one piece. And so it's really the technology is really immense. What it's allowed us to do, it's allowed Emeka in Enugu to buy a piece at Sotheby's in New York that he would have never had access to. He would have had to know someone at Sotheby's or know what Sotheby's was even about. But now you have kids that are 20, 25, 30 years old buying pieces that they would have never even knew about. But now, because of the open nature of everything, now everyone has a fair playing field. So it's really it's really opened up art market for everybody, and so it's just a really positive thing to see.
All right, we've seen most of these NFTs sell for a record amount, so over $1 million and so. But Michael, thank you so much for that update. Always good to talk to you, and enjoy. Maybe have a green weekend, I guess.
Thank you so much, hopefully.
All right, Michael. Well, top of the market cap, though, we have BNB down 2%. The biggest loser there is Solana. Even though Solana's had an incredible run a few months ago, now it's trading at $146. It was trading about $50 like 2 months ago. So let's see how my coin to watch is doing. We have Afen blockchain there, one of the NFT projects I'm watching right now. It's at 1 cent. Market cap $1.63 million. I'm expecting some, chatter about this one because they're going to be listing on a centralized exchange. And when they list on more exchanges, there's more liquidity. So I'm expecting some, good movement for Afen there. And top 5 gainers here, Shiba Inu there, up 34%, less than 1 cent in price. And Audio at 25% up. Atom and Avax there, 9 and 7% up. And Zilliqa, we have it at 11 cents, up 4.80%. Top losers have Room there leading that counter down about 11.99%. So it's a red Friday, but there's still gains to be made.
Yeah, and we hope it to be a green weekend. And it's good to know that even though Michael Nagy is in New York, he's still in touch with his roots in Enugu.
Exactly.
Well, that's it on the program. Thank you so much for watching. Do remember to join us at 1:30. We have a special edition of Business Incorporated today, where we'll be hooking up with the MPC meeting, the 5th for the year, to get the decision and how that will impact on the economy. So please do join us at 1:30. I'm Ini John Mekwa.
And I'm Ladi Williams. Have a great weekend.